Good morning, ladies and gentlemen, and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Bob Frady, who is the CEO of Hazard Hub, which is an insurtech that's been through the Lloyd's Lab, which is how we know each other. Hi, Bob, how are you?
I'm good, Alex. How are you?
Yeah, I'm very good. And judging by the sunshine, it's clear to see that you're not joining us from London.
You know, I was talking to someone from London and they said, I opened my window and looked outside and all I saw was misery. And I'm like, wow, that sounds like a Smith song or something. I'm like, I'm sure it's not that bad.
I wouldn't put it that strong, but we are at that point in the year where you wake up and go to work and it's dark, and you come home from work and it's dark, and lockdown is not a good environment for that.
No.
So where are you based out of? Are you California?
Southern California, yeah, the land of sunshine and Disneyland, and wildfires. The three things that we have.
That's the three things you can offer the world. But well, I mean, it makes sense for perhaps you'd like to introduce Hazard Hub and give sort of a good summary of kind of what you do and what it is.
Sure, it's real simple to explain what we do. We tell you all of the bad stuff that can happen to a property. Mm-hmm. Whether it's wind, hail, tornado, lightning, hurricane, wildfire, flood, ice dams, frozen pipes, underground storage tanks. There's more than 900 data variables that we deliver in a less than 2-second response for any point of land in the U.S. So yeah, that's it. But and some other stuff about the property, like where's the fire station, where's the fire hydrant. What's the square footage? What's the beds, baths? Things like that.
I saw in your video that you said you're not the guys to invite to a party.
No, it's distressing because first of all, we try to find where all the hydrants are, and we tell people, hey, there's a hydrant over there. That's good for you. And then the second is we're like, because we can look it up on our phones. It's like, yeah, you're going to have a flood issue here. One of the guys in our board of directors has a small river running through his property. I'm like, that you're in a flood zone if you stand here. If you stand here, you're not. But if you stand here, you are. He's like, yeah, I know. So bought it anyway.
Can it work? It works out to a specific point. How big can that point be?
It depends upon the data that you're looking at. Mm-hmm. So if you're looking at where's my nearest fire station, then that distance is as sensitive as the point, as low a level as you can get with the latitude and longitude. So if you moved over to the other side of the house, the distance would change. Yes. For flood zones, it's the same thing because those are boundaries. So any of our distance to categories, it's wherever you are standing or pointing is where we measure from. If you're looking at is the hail risk going to change on this side of the house versus that side of the house? No, it's not. Some of those risks aren't quite as distance sensitive as things like wildfire and flood and fire protection, which are all very distance sensitive.
I think this might be an obvious question, but I'll ask it anyway. I'm the sucker for asking the stupid questions. That's my role. It surprises me that this isn't data that insurance companies have, or
yeah, it is. Well, listen, with enough brains and enough creativity, you could probably create a company like this. But that's like saying, if I gave you, there's a TV show in America called Fixer Upper, and these designers go in and create these beautiful homes. They take basic ingredients like lumber and they turn it into something magnificent. Not all of us can do that. Sure. So there's a skill in the transformation of that data and the standardization of that data that's really beyond a lot of people. We take it for granted because we've been doing it for such a long time. Sure. But it's really a skill that most people don't have. And then they throw their hands up and they go, oh, this data is terrible. It's theoretically, could you do it? Sure. I mean, theoretical physics is easy to a theoretical physicist, but not everybody can do it. And not to say that we're quite that theoretical, but as an example, so some companies try to, and the problem isn't necessarily in the building of the data as much as it is in the maintenance of that data.
Sure.
Because a lot of times we'll see companies who build their own product or try to build their own product, and they understand the level of magnitude that goes into it, and they still do it anyway. And then they figure out, okay, we've got this great product, and now someone says, well, now you got to update it. And they're like, it wasn't in the plan. It's really, collecting hydrants and fire stations is really no fun, but it's what we do, and we're really good at it. So, standardizing government data and building models on top of that to predict risk, it's no fun, but it's what we do. So they should.
Yeah.
It's easier to buy it than to build it these days.
Oh, sure. I mean, do the governments have a comprehensive kind of overview of that stuff, or it strikes me as one of those things that it's just a bit, exactly the messiness of it. The messiness of that data is the challenge. But
in the states, there are 50 states which are their own entity. There are 3,141 counties that are their own entity, and there are over 8,000 municipalities that are their own entity. Wow. And maybe half of them agree, and the other half, it's mishigas. It's just crazy time. So, for example, New York City, Las Vegas, Seattle, Los Angeles, and Washington, D.C., all supply us their fire hydrant data.
Yeah.
Nashville, Tennessee, Dallas, Texas, Chicago, all say it's Homeland Security. I'm like, if you ever really wrestled with the fire hydrant, they're very, very well. You're under more danger from your toilet than you are from a fire hydrant in terms of poisoning a water supply. Yet that's just how it works.
Yeah, sure.
Some states, like we compile the nation's only collection of underground storage tanks and whether they're leaking or not. 8 states don't report whether they're leaking, so we can't give that data. 42 do, 8 don't. One state delivered the data on microfiche because I think they just wanted to make it difficult for us. Some deliver it in PDFs, and some it's all over the board. And so we know that it's very frustrating. And then sometimes there's some very good data sets, like there's NOAA data sets or FEMA data sets, but it's not enough to just regurgitate that data. You have to make some intelligence out of it, because there's a ton of data out there. There's not a lot of intelligence around that data.
Sure. Well, that's commonly been the problem with insurance companies, isn't it? I mean, insurance companies have never been short of data. It's what you do with it. And
then the other thing is, once the insurance company takes ownership of the data, then they become the responsible party.
Yeah.
If you're looking at, say, wildfire risk, and you build your own wildfire model, now you have to explain to the state how you're not gaming your model to avoid certain types of risks. Versus you come to a company like us, and we're a disinterested third party or a neutral third party. So they can point to us and say, these guys told us that that's the score. And so based upon what they say, we're going to react this way. And then it puts the onus on us to talk to the state insurance commissioner, which is fine. We don't have any problem with that. But it gives them, I don't want to say it gives them an out, but it gives them a freedom. It's a pain in the neck to collect and compile this data. Better to have, it's easier for a company to plug in and say, okay, we're pointing at these guys. A, it's standardized. B, it's immediately available. And C, they're a neutral party. So it gives me some level of separation from the risk itself to say, this third party is what's giving me the data. But yeah, there's probably some smart people inside of insurance companies who have data sets like this. Sometimes it's hard for them to get traction because it's bottom up rather than top down.
Yeah, and the other thing as well is you're bringing in, you're data agnostic in terms of you're just bringing in the best quality data to provide the the data within the sort of area that you're interested in. Whereas an insurance company is obviously sort of looking inward most of the time. Most of the time, it's collecting its own data.
Yeah. Yeah, spend your time doing that as a much more efficient use of resources than trying to sort of build a third party provider like Hazard Hub. It's just I don't want to say it's a waste of time. It's an inefficient use of time.
I was just thinking of this is a very overcomplicated analogy, but it's like playing poker, right? And you've got your hole cards, and the insurance company's got its own cards that it can see. But by going with Hazard Hub, they're paying to see the community cards. If they don't want to see them, then they're playing poker without all the information. I might have to edit that out because I play a lot of poker and I'm not sure.
You're right. That's a very convoluted. But but it's true. Like when you watch the World Poker Tour on TV and you see the little hole cards underneath.
Yeah.
You're kind of like the insurance company. You kind of know if you want to what those cards are, and we can tell you what some of those cards are.
But you got to pay for the privilege. So
it's privilege. It's not free.
I'm going to park my analogies and just ask questions. I think that's better. So you don't come from a traditional insurance background at all, as far as I can tell. What was your background before Hazard Hub? And obviously the big question is why Hazard Hub? Where does it sort of come from?
Well, as a friend of mine used to say, I've had a career with a number of turns in it. I'm a musician by training, you can see from the background.
Yes.
Being able to knit together disparate instruments to create a solidified sound is something I've always done. I'm a technologist as well. So when I first started out my career, I worked for a company called National Decision Systems that built and I lived in New York City, so there were a lot of insurance companies around. We built models that projected sales totals down at the county and zip code level for different lines of insurance. Liberty Mutual was my first customer and my best customer because they were so open about what they did and how they worked. It taught me a ton about the industry. So I've never worked in the industry. I've always worked alongside the industry.
Cool.
I ended up running the insurance and investments practice for NDS, which became Claritas and all that stuff. And that's where I met John, my co-founder. Then I spun off and went into the marketing world and did a lot of consumer marketing efforts. And John called me up one day and said, hey, I'm working over at this company called CoreLogic. I need some help running some major accounts. Can you help me?
Yeah.
So I jumped in, helped him out, ran some accounts. And while we were there, my former mother-in-law's house flooded. And so we had all this data. We looked it all up and I asked her, I said, did you know that you were just a couple of 100 feet from a flood zone? And she said, no, the insurance company didn't tell her because they don't cover flood. And the bank didn't tell her because she wasn't in the flood zone. So flood insurance wasn't required. And so the water came up, flooded out her basement, and she had a big loss. And really all she needed to do was change the batteries on her sump pump on a more regular basis, and she would have been fine. So we thought, wow, letting consumers know this product is available is something that we should do. And the folks at CoreLogic, good people, they were like, nah, we don't want to get into that business. And it was one of those itches that you couldn't completely scratch. So I jumped out of CoreLogic. I went back to the marketing world. I built the email infrastructure for Live Nation. I was the global head of communications for outbound communications for Expedia, and worked with some lead gen companies and saw that all this technology was used to compile data in a way that most people only dream about. The technology world was advancing so quickly and so creatively that it was almost outstripping people's ability to keep up. And which was great because the more creative you were, the more you could use technology for your advantage. And so about 5 years after we left CoreLogic, I had lunch with John and Brady, who's our third co-founder, and said, there's a ton of new data out there. There's a ton of new technology and nobody seems to be using it. And we thought, all right, well, why don't we do it? So we made some screenshots. We showed it to a couple of prospective customers, and one of them said, if you build that, I'll buy it. And we said, well, how about a down payment? And they said, okay. So that's how we got started. And that was 4 years ago. And we've been bootstrapped ever since. So it was really fortuitous that we all had lunch that day.
So you sold it to your first client without having made it at all?
Yeah, oh yeah, that's the way to do it. You know,
yeah, I know. But
if you, you know, I have this fundamental belief that you can change your life for $1,000. And first of all, you have to have an idea. That's the hard part. But that's free. The idea is free. The second part is you have to write it down and you have to visualize what that product looks like. And that's easy to do now. You know, I went on to Odesk at the time and paid a designer. I said, actually, I used a local designer in San Diego. Here's my chicken scratch. Here's what I envision. Build this and make it look pretty. And she crushed it. And so we took these screens that were just design screens. You know, they look nice, and showed it to people. I'm like, yeah, I get that. I buy that. And there you go. It's like when it's almost like looking at a 2D rendering versus a 3D rendering of a property. Completely different engagement with those tools. So that design work cost us $1,000. And then we called people who we knew in the industry who might be customers. And we said, hey, what do you think about this? That was free. So we put the three of those together, changed our lives for $1,000. Wow. And now we have Hazard Hub. And anybody can do it. You have to have an idea and you have to know some people to talk to. That's the hard part. But the middle part is the people think the middle part is the hardest part. And that's the easiest part, which is make it look like you want it to look. Connect those two at the end and then build your own business. That's how you do it. I'm sorry, I get on my soapbox about this stuff.
No. To be honest, no, I was really interested to hear that. I had a really good conversation with someone prior about the differences between VC funding in Europe versus VC funding in the US. And in the US, there's much more of a kind of, here's an idea. And I know you didn't get VC funding, but the idea of selling it to a customer before you've even built the thing. Whereas there's definitely a culture in Europe about like really grinding it out, building something that kind of is complete and then going and selling it. And I like, I'm much more kind of, you're sort of going MVP route really. It's just like, go get there quicker. Because then more importantly for me, you're getting that, if you do $1,000 and then you get customer feedback, essentially, you've got, right, these are our customers and this is what, and like, they're the people that are going to dictate whether it flies or not.
The best customer feedback comes in the form of a check. So, or now an EFT, either one. It's interesting because we never thought about raising venture capital dollars.
Really?
Yeah, because we had no familiarity with it. You know, it's old. We're old guys, you know, and that's what we thought was more the European model. And then I had read the Lean Startup and all that stuff and some other books about starting up. I'm like, let's just talk to people about it before we decide to put any more effort into this. Let's get some customer feedback or potential customer feedback. So we built it, we showed it, and we just happened to ask them, and they said yes. And it's like, okay, I guess we're starting a business. So if we had showed that first to the venture capital community, would we have raised capital? Maybe. But we would have had to give up a lot for that.
Sure.
And that check would have been expensive. And believe me, we asked a lot of people. The problem, interestingly, that we ran into is after we got the first customer, we got the second customer right after that. And it wasn't enough to be profitable, but it was enough to show some revenue. And that actually that seemed to hurt us in the eyes of the VCs, especially early stage, because everybody wants that, you know, I want that 1,000 to 1 return. I'm like, sorry, pal, we've already done the hard work. You know, you're looking at maybe 10 or 20 to 1. And if they had invested at the time, it would be 20 to 1 right now. And where we are today, never mind where we'd be in 5 years. But it was such an interesting thing that, you know, you have to decide what you want. And we don't want to give up a lot of control because John and I have been fired 9 times between the two of us. And like, we're just, we go down the money route. We're going to piss somebody off, and they're going to get us out. They're going to fire us from our own company. And it's like, they can do that now, as long as, again, they send us a big check.
No, I think that's that. I mean, that strikes with my sensibility. I'm self-employed guy, and I can't fire myself. I work in an industry where you can get investment, but I never quite understand why you do it.
And part of it's cultural. It's like, how Americans have a reputation in the UK. We're loudmouth, we're brash, we say what's on our minds, blah blah blah, and it's true. It's like, if we have a question, we're going to ask it. Like, I'm watching this TV show right now called Endeavor, which is the precursor to Inspector Morse, apparently.
Oh, okay.
And nobody ever says what's on their mind. And so the show ends up lasting for 2 hours. I'm like, if you had asked these questions like 2 hours ago, we'd be done in half an hour. And that is really a cultural difference where, and I'm not saying this is true for everyone, but by and large, the brashness of the American entrepreneur is such a benefit, because it's like, all right, I'm going to do it. I don't care what you say. I'm going to do it. And we're going to build it. And we're just going to do it because there's enough people around who are like, okay, do it. And what's interesting is, when you go back to web, sort of the beginning of the computer age, you had West Coast companies like Sun Microsystems, and you had East Coast companies like Nixdorf Computers and Honeywell. They lost the game because they wouldn't share. They were like, we're going to control everything. And the Sun people were like, hey, let's have a party. And the West Coast won. And that driven entrepreneurial, let's get things done mindset infuses everything that we do. And that is such a gift to have, because you don't have to build the perfect product. You have to build the product that works perfectly in the minute. And that doesn't have to be as complicated as the perfect product.
Yeah. Well, obviously the podcast is about kind of leadership generally from an innovation standpoint. And I was having a conversation with a client about innovation today, and they said, innovation is just the word. What we're really talking about is change. And they said the biggest difference between change and not changing, not evolving, was to quote them, just get shit done. And that's we can talk about innovation, we can put fancy graphs together, but the reality is we've got to change the way that we do things. And
to go back to your question about why they don't do this internally at insurance companies, just imagine the review process that you have to go through in order to do that. It's like, I had a conversation with a large insurer in the US. We hadn't talked in 3 years. And they said, I'm sorry it's taken so long. We've had some internal things. It's nice to talk to you again. I'm like, it's 3 years. The insurance train's right on time. So it's like, and we had another customer who we've built a database of formerly clandestine drug labs, so you can make sure that the property has been remediated before you insure it. And they're like, we wanted to build that product, but we couldn't get internal approval. I'm like, I am internal approval. I and my 2 partners are internal approval. Wow. And when you only have 3 people in the approval process, things get to be much faster than in big companies. And that's what you get from being in a small company. You get that speed and flexibility, and a lot of these customers can't move that quickly. And to us, it's not about innovation. It's about evolution. The insurance model is a great model. The law of large numbers just protects a lot of bad decisions. So we're not looking at completely changing the industry. We're looking at taking some burrs off the bone to help it be more effective in the way that it works. So I feel bad for innovation people at insurance companies, because they see all these cool things and then they run into the wall of resistance that internally, that we call them the Maytag repairmen, which is because I'm old, I can use that one. Right. But Maytag repairman was the loneliest repairman because Maytags never broke down. Innovation people love to talk to startups because they get it. Yeah. Being able to execute stuff, that's more of a challenge. And I really, and part of the problem that insurtechs bring to the table is they're like, get shit done, let's move, let's go now. And then you run into this industry, it's like, give me 2 or 3 years to figure this out. And either the insurtechs don't have the money or they don't have the stomach to ride out that 3-year sales cycle. The biggest benefit that we had going in is we knew what this sales cycle was like before we started. And part of the reason for not raising capital is, people want their money. They want to see that growth. And we knew it would take a while to get the roots planted. Once the roots planted, then we'd start to see some growth. And, we grew a lot. We've grown 800% in 2 years.
Wow.
But most of it has been in the last 2 years that the majority of our growth has started to happen. And we're really just getting started. So, for us to double next year shouldn't be an issue. And the year after that, we expect to double again. So, because once you get rolling in the industry, once you get that, okay, you get the thumbs up from this company, then everybody else sort of follows along.
And of course, it's a very interconnected industry, isn't it? More so than any other. So, and you start to get that element of getting to know people in one company. They're only going to go and move to another company that could use your product or service, and therefore, the sort of good word spreads with you. It's a lot more. I find with the insurance, just the longer you're in it, there's this kind of thing of going, oh, you're still there. Okay, well, it must work then.
Oh, it's amazing where, we call it the math equation. For insurance companies, risks are bad. Risks equal bad. Insurtechs equal risk. Therefore, insurtechs equal bad. That's the math you have to overcome. And the way that you overcome that is persistence. There was a scene in the movie Wall Street, again, because I have gray hair, I can use this, where Bud Fox sits outside of Gordon Gekko's office every day for a month with cigars. And finally he gets let in. You have to be like that in the insurtech space. You have to be there every day. You have to let them know that you're there without necessarily being intrusive until they invite you in. That is how the game works. And anybody who doesn't like the game should go invent something else, because that's what you're dealing with. And if you don't like it, tough. It's just the way it is.
Yeah, and that's also the sales. It's a sales cycle as well, isn't it? At that, when you're selling to companies of that scale, the process you have to go for, just the admin of dealing with companies at that scale is something else. And I think that's something that, it's so interesting that you come in with that knowledge. If you came in with nothing else, was just, this is going to take time, as you mentioned. So obviously, taking it back to the Lloyd's lab, because that's how we came across each other. When did you go through? What cohort were you?
I think this is cohort 5. We're actually in the middle of it right now.
You're in it now, aren't you? That's right. Yeah.
Our demo day is November 18th. 18th or 19th, one of the two. And it's been such an interesting process. It's like we came up with a pre-presentation. And the feedback was, it's great, but it's too detailed. I'm like, oh, okay. So now we're going to simplify the story, because really everything comes down to story. It's like, do you have a good headline? If you don't have a good headline, it doesn't matter all the details. And this frustrates a lot of people, especially people who are very good at tasks. They're like, can't people see that I know all this stuff? And the reason is, you don't have a good headline. It's like some jerk who walks in and is like, I'm going to solve this problem. Here's how it's going to work. And we're going to get it done in this timeline. Versus somebody who has a giant spreadsheet of a plan with Gantt charts and everything. The person who brings the confident story wins the game more often than the person who knows what they're doing. And that's just a sad reality of life. It's not a sad reality. It's a reality of life. And you have to reflect that in what you do. So even though we kind of ignored that in our first presentation. So, and really it comes down to one simple fact, is these Lloyd's members, by and large, are flying blind when it comes to risk. because it's been so expensive to get risk data on the front end. They can't set the correct technical price. And so their street price is below their technical price, and then they end up getting put in relegation, in runoff, if they're not careful, because they don't know what those risks are. You know, a lot of times reinsurance, cap models get run after you bind the contract. It's too late by then. You're already married, you know, and so what we're trying to do is push much more data right to the point of decisioning, so people can make smarter decisions about what their price should be. Now, listen, at the end of the day, we're all chasing premium. I get that. But at least know that this premium comes with a certain amount of peril that this premium does not. That's what we're trying to do. Like 95%, and this number was astounding when we saw it. 95% of hurricane losses over the last 5 years are in F hurricane zones from our model. And yeah, a lot of that's Florida, but it's true for Texas, it's true for South Carolina, North Carolina, Louisiana, it's true for every state. Risks happen, they don't happen in surprise places. And we can identify that right up front to let you set a better technical price. Now, what you choose to sell for, that's your call. How you choose to use that data, again, that's your call. We're an ingredients provider. We provide better, higher quality, less expensive ingredients. And what the customer does with that is really up to the customer. That's their competitive advantage, is to use it creatively.
I suppose that there's always a challenge, isn't there, against, there's the kind of writing for volume and writing for value, which is what people talk about, is there's definitely a lot of kind of, you know, people want to write big portfolios. They want to write big numbers. And there's a little bit of a contradiction between that and writing good business, I think. So, you know, have you ever got the sense that maybe this is, in a way, people don't want to know at that granular level of detail? There's a resistance anyway.
Yes, we're still here, you know, and we've been here for 100 years. Thank you very much. Move along. And listen, CEOs get fired over bad loss ratios, and companies survive, but people don't when you have bad years. And you know, companies have to lay people off. You know, and really what it comes down to is there are no bad properties, there are just bad premiums. And what's the right premium to set for a particular property? You could write an underwater aquarium in the middle of a river if you wanted to get the right price, you know, and that's what we're trying to do. So yeah, there's always this, well, we're big, so we're not going to worry about it. But there are so many new competitors who are data focused, who are coming into play, that are going to just leave you with the bad risk. Because you're, you know, in poker, if you don't know who the patsy is at the table, you're the patsy. And that's what it's coming down to with data. If everybody else has that data, if you've got that chart that says, okay, you know, here's how to play every combination, and you're the guy without that, then you're going to lose, because you're going to get all that premium. Like, hey, we're writing premium like crazy. And then they have a bad year and they go to 120 on their loss ratio, and bad things happen.
I mean, I was having a conversation with someone about, you know, there's obviously been there's been rate rises across the board pretty much. And some of the sort of percentage rate rises are very dramatic. But I was having a conversation with someone that writes a sort of related business to yours, as in they provide better data, but in different areas, in different categories. And they were saying everyone's very excited about these rate rises, but on our model, the price still isn't high enough, you know, and they were saying that applies to quite a few categories they've looked at, is that, you know, we're letting, and almost you're sort of, the tail's wagging the dog there. You're giving a price in order to win business, but the price is still not enough to actually write it with a sort of the appropriate level of acceptance of risk. You
know, listen, no matter what tools you have, you're still going to have losses. It's part of the social contract of insurance. That's why insurance exists, is to cover those losses. You know, it's almost a socialist approach where, you know, the money of the many pays for the needs of the few, which really irks people when you tell them that in the insurance business. I'm like, you know, it's a socialist system.
Well, it's the law of large numbers. That's how it works.
Yeah, and you're right. You know, the in California, for example, homeowners insurance is too cheap. You know, we don't have wind, hail, tornado, and lightning, but we do have tremendous wildfire reserves. And if you have a commissioner who wants what we'll call fair pricing and not sort of risk adjusted pricing, you have to figure out a way to rise the tide for everybody to make sure that we can pay for the needs of the few. And it's a micro risk in terms of it's 6% of the population is in the highest wildfire risk in California, but the average loss is $400,000. So it's pretty high. So, you know, those are questions that how much is too much? And that's a question that is really tough from a social standpoint for insurance companies to answer, because their response is, well, I'm just going to pull out of the state. And that doesn't help anybody. But it does lead the way for innovation, you know, for data smart companies with actuarially sound approaches. It's just wait. You know, if your price is higher right now, just wait. Market will harden. You'll be there. But it's a tough. That's a much bigger question than we can answer, or would even try to answer. Is systematically you want fairness in pricing. What does fairness mean? And that's a much bigger question to an insurance commissioner than it is to an insurance CEO. You know, the insurance commissioner might say everybody gets low prices, and the insurance commissioner would say, I want to properly risk adjust that price. Excuse me, the CEO would say that. And there the battle is engaged. That's absolutely. It's tough. It's tough.
Well, there's been obviously this big drive towards, and obviously Hazard Hub plays a little bit towards this, the personalization, the true personalization of insurance, and you know, looking at route, it's analyzing your driving style, getting you to a certain point. Now, with driving style, that's fine, but then when you look at things like where people live, if you're priced out of, like, let's say, for example, take it to its extreme, you're priced out because of your financial situation of anywhere that isn't a floodplain or a fire risk. But then you're living in a place which you cannot afford to insure because the price is so high, because it's so personalized. And obviously the biggest concern then becomes about health as well, because, you know, people are going to walk around completely uninsurable.
Well, that's where state insurance pools come in. Like,
exactly.
You know, fair plans come in and things like that to maintain, but even the fair plans can't get the appropriate rate sometimes. And then they end up putting a tax back on the admitted market. But a robust fair plan market, I think, is a great thing, because the actual claim experience is small. You know, for every 100 policies, if you have 3 claims, that's a lot. So the claim incidence is relatively small. So if you took all of the worst risks and spread them around, there will be years where you have terrible years, but there will be years where you will not have terrible years, and you reserve that money. But put that in a pool, and then let the pool get managed appropriately. It's an excellent way to look at it. The problem is it's a political cluster to try to get that stuff all done.
I was going to say we're going to get called socialists again, aren't we?
Yeah, we are. It's fine, whatever.
Well, we had obviously, as soon as COVID hit, there was a big talk about, you know, having a pandemic re in a similar way that we've got flood re over here. But the right criticism as well was that, look, we can't just say every solution that kind of challenges the model that we currently operate within just gets it can't all just get stuck into a public fund. We need to kind of try and be creative and try and come up with different solutions. And obviously there's been lots of talk about parametric solutions, and look, I'm a third party to the insurance industry, and certainly not my place to say, but I think it's, you know, it does throw up interesting questions. The more we're able to kind of really accurately, using things like Hazard Hub, work out the cost of a risk, the true risk opportunity, we do run this kind of we're going to isolate certain areas that are uninsurable under traditional means. So what are the solutions to that? And that was more of a statement than a question. I appreciate that's
it's
huge question.
it makes me think of a friend of mine in the industry. There's a company in the US called Kin Insurance that writes in catastrophic areas. And their CEO, Sean Harper, said, there's a fundamental flaw in the insurance industry. And the reliance on actuarial models is a fundamental flaw because the actuarial model is based upon input from the customer.
Yeah, sure.
It's like the customer has to tell me all these things, and then I judge. Well, what if the customer's not telling you the truth? Or what if the customer doesn't know and guesses?
Yeah.
You know, does the customer know what their annualized risk of hail is at a location? No. So all of these assumptions that you make about actuarial models being the be all and end all are kind of faulty because of the human level of input that's required to get the data necessary to feed that model. Yeah. And I was like, that's a brilliant observation. So when you make the assumption that the actuarial approach needs some level of adjusting on its own, it opens the door for you to be much more creative than if you are trying to force fit everything into an existing motif. So that was such an eye-opening conversation we had. I'm like, you're right. You know,
so it's so true of many things, though, isn't it? That you think about that from a cybersecurity. The biggest flaw in cyber is human error, and it's like in my business, the biggest flaw in hiring good people is people. We can identify quite quickly who are, if you said to me, Alex, find me the head of marine liability, fundamentally that's not the challenge. It's the human interaction. It's have you got a skilled interviewer, or are you going to sell that? But if they walk into a room and it's the human bit that will go wrong. But yeah, the same with insurance as well. I can't remember who I was talking to, but it was David Hughes at Mulberry Risk, and we were talking about, as he's an insurance professional. He worked as a chief actuary, and then he was trying to do insurance on his home, and they were going, well, when was your house built? And he's got this sort of converted cottage, and he said, well, this bit in like 1600, this bit in 19, which bit? So the information is flawed because at that point, even the question was wrong. So we just need to take a view of. It sounds like the actuarial thinking is correct, but the assumptions feeding into that might not be.
Yeah.
So a bit like Hazard Hard, and what I like to think about a lot of the insurtechs that we talk to, it's not replacing. It's not saying, right, you guys are doing a bad job or we're replacing that. It's giving people better tools to do their job better.
Absolutely. Yeah, that's it. We're not about revolution. We're about evolution. And one of I filled out an application for homeowners insurance a couple of years ago, and I got so mad because it was asking me things like, where's the nearest fire station? How far are you from the nearest fire hydrant? All these questions that there's, how many square feet is my house? All of which is available in our API feed or feeds from other people. And I'm like, why are you doing it this way? We have some customers who are down to 4 questions for homeowners insurance, and they are actuarially sound because it's only 4 questions that need to be answered. All the other stuff has been pre-answered, and that's where we come in. We're like, here's the pre-answer. I don't need you to ask these questions. Maybe you want them to verify it just to make sure that we're on the same page. But I don't need you to tell me where the fire station is or where the fire hydrant is or how far you are from the coast or what the annualized risk of wind, hail, tornado, and lightning are. I don't need any of that, because I already have it. So if you eliminate that from the decision-making process, A, you can price much faster, and B, you can price more accurately. And that's what we're about.
Yeah. Well, look, that's I said it would sort of take 45 minutes, and I think we're about there, and I think that's a brilliant conclusion to kind of what we've been talking about. Helping people do better and faster, because that's it, right? The insurance industry works. The law of large numbers works. but it's got to evolve, and and most of that is about doing things quicker and better. So yeah, no, look, thank you, Bob. That's really kind of you to take the time. I really appreciate it. And
my pleasure.
Before we sort of close off though, you know, what's next? Obviously you're finishing out the kind of Lloyd's, you've got to do your demo day. What's going on with Hazard Hub this year's been a tough year for everyone, but maybe let's look to next year, sunnier climes of next year, hopefully.
We just released our catastrophic flood model, which is the first of its kind in the industry. You know, people get wet and they're surprised. It's like, well, it's because you got too much rain. And we can show you that. So we got that out the door. I think that without giving away too much,
sure,
from a surprise standpoint,
yeah,
our goal is to deliver even more relevant and meaningful data about the point that you're sitting on. So the risks are what they are, and we'll do a even better job of getting data to improve those risks. But what are some of the elements that you need to know about the property that you don't necessarily have today? That's our 2021 goal. So I don't mean to sound cagey, but I want to make sure it works before we talk about it.
No, I like it. It's like a cliffhanger. We can follow up. We'll follow up next year. On
Hazard Hub.
No, that's really kind of you spent some time with Bob. I really enjoyed that, and look, I'm really looking forward to kind of hearing more about Hazard Hub in the future. And but we'll definitely stay in contact.
Sounds good, Alex. It's good seeing you this morning.
All right, take care.
Take care.
Right.